Oh my gosh, what happened right here? Hey guys, welcome back to another episode of Don't Do This, where we take a look at the dumbest trades I've done that you should definitely not do. Today's Don't Do This of the day is the CRBP put that I got into about 2 weeks ago. I sold 5 puts on this, assuming it would not fall below this $4 strike price and the $5 strike price. And as long as that held, I would get to keep the full value of the premium, which at the time was $200 and $463, an incredible amount of premium when you compare it to the amount of collateral I had to put on it. I only had to put $2,300 of collateral to make nearly $700. The expiration date is a little bit out. It's about 45 days out from when I placed it. Research shows that's a very safe amount of time where you can get a lot of premium, but also gives you the time to take profit and to get through the ebbs and flows of a stock. But something really interesting happened today that resulted in this right here. You see, losing a ton of value. Look at this 1 day chart. It looks pretty boring, right? But now let's look at this 1 week chart. Oh my gosh, what happened right here? Do you see that? It was $9 as of September 4th, last Friday, and today it dropped over 75%. Not only did I lose all of my premium, I lost essentially double of that. And just with these two stocks, I'm at negative $1,300. So it's obvious why you should not do this. Now, the reason I did it, and I even made a video, which you can check out, I'll link below. It's called My Riskiest Play Yet. It's because I didn't know anything about this stock. All I saw was its super high premium, and I got really greedy. I did some research, about half hour of it, to try to figure out why the premium is so high. I know the premium was high because the implied volatility was very high, but I just didn't know why the implied volatility was so high. I couldn't figure it out, but the premiums were way too juicy and I bit the bullet anyways, full well knowing that this was a huge risk. In my slight defense, I also remember just looking at the graph and looking at its resistance points, and it just didn't seem like it would fall that much. I should have been more careful. If the implied volatility was so high, that means people knew that something was coming. It was definitely priced into the options. That's why it paid so much, because it was so incredibly risky. And in the future, if I don't know what a stock is doing or what's coming up and I see super high IV, I should just stay away from it. It was over 400%, which is ridiculous. Yeah, and I definitely paid the price. The one good thing I would say about this play, though, is that my expiration date is very far out in the future. I still have nearly a month, so hopefully by then it will come back up. I don't expect to make any premium on this. I'm definitely going to take a loss. So quick recap, if I'm the seller, as long as this put on expiration date is below my strike prices, which very likely it will be upon expiration date, what I have to do is essentially buy the person that holds these put contracts shares for these two prices. And obviously, if this stock is only worth $2 at the time, then I will be losing money. I'm just buying a very cheap stock for way more expensive. So hopefully this can tick back up to $3 or $4, and then ultimately my realized losses won't be that much. There's still a month, so we'll see what happens. I don't think it could drop any lower. This is literally the worst news that could happen. I'm sorry, I didn't even tell you why it dropped so much. It's because one of the drugs it's doing research on, called lenabasum, it didn't do well in its trials. It had a lot of potential. It was on track to become the first ever FDA-approved treatment for systemic scoliosis. Corbis would have had a blockbuster drug. Because the drug test essentially failed, it didn't show significant results when compared to a placebo. That's why shareholders are heading for the exits today, but not me. I am still holding on to the bag because this is a contract. Yeah, we'll just wait and see. And that's it. I hope you enjoyed this episode of Don't Do This, the best show on the internet where you see somebody really stupid do things you should not do. Please like and subscribe to enable and support more stupid calls like this so you don't have to make the same mistake. Thank you so much and stay tuned.